Hey, Paul, or anybody who watches this, I just wanted to do a video for you to answer your question, just because I feel like it's a little bit easier with this type of topic. So, for those of you who haven't seen Paul ask the question, it's in James's thread here. So, again, my answer is more relevant to my method specifically, but you're going to see very common overlapping themes between how me and Jim do things. It's more sort of how we pinpoint our entries and a little bit different on our exits here, but I think I can answer your question that's going to be better for you than I could do with a chart here, which I tried to do below here. But basically what Paul's asking here is, and it's really in sort of his second question right here, excuse me, his first question is about, he sees good price action, sees good levels, gets a little tripped up with how to enter, how to exit, sort of what to do overall here. So I think I'll just go over your actual charts here. I think it's a little bit easier. And again, I think the reason most people get stuck as a break-even trader, which is the hardest place to be, it's the most frustrating and where you will spend probably the most time. And I always say, I think people who are largely losing traders need to make critical changes. People who are break-even traders need to make nuance changes. They don't need to revamp everything they're doing. They need to find a balance that occurs with the method they're using. It's usually in the trade management, which is directly tied to their entries, which is directly tied to their risk management of a trade. So if we go to your trade here on Disney, which again I haven't really even read through yet, but let's just go through here what you said here. So you said, for example, here's a paper trade I did on Disney stock in December. It's just below the 11,000 level. I had a price pivot zone marked with a gray box, two fibs lined up beautifully, the 150 EMA, and of course the big round number of 11,000 is right there too. Then I got a 2-day pin bar circled in white. I almost didn't take it because I thought it had gone too far through the big round number, the fibs and the EMA, for them to be considered to be acting as Confluence. But then I thought, well, it closed back above them, so it probably is valid to see the pin bar as having rejected those levels, so I can go long expecting a move higher. As you can see, it made for a nice trade. But now I'll post another example that didn't. So let's look at this first, because I just want to see your thinking and see what you're looking at here. So here's your bar that you're calling a 2-day pin bar here. So again, if we take the close and the open and combine them, it looks like it just sneaked in and closed within that prior bar here. So again, that would sort of be your close here. Here would be your pin bar, nice long nose here. Again, I see the price pivot zone level you're using here. Personally, I'm not thrilled with this level, if I'm being honest here. I think it's sort of less has happened in the short term here, whereas, for example, here's support, resistance, which is essentially price boxing here, right? Price breaks higher, and here price is boxing again. So there's a little bit of room here between this pin bar bouncing off your level and into this previous support. But even though price cut above it here, this would make me nervous trading back into this. Truthfully, what I prefer is trading away from a level that looks like this. Now, look what you can see what happened here. Price breaks through, closes above. Look where it pulls back to, this former support. So being that we're trading back into this level, I think it's a little bit trickier here. And this is going to go directly into your USD Canadian. Okay, so let's go back now to your USD Canadian example, which for me is a better example of what I'm trying to say than this. So Disney worked out for you, great. But I actually prefer your example here on the USD Canadian. Now, I'm going to use my chart just because I just prefer it. It's a little bit easier for me to show. I'm used to it here. So here's your pin bar, once again, that you're using, right? Here's that support level that you're looking at. And here's that boxing that creates that support and resistance here. Here's that pin bar. Now, technically speaking, this isn't a pin bar, I don't believe. It looks like it closed just below the low here. So let's just look at it. It's 75.23. Right, so it actually technically is not a pin bar. Now, with that said, this doesn't mean that if you like this trade, you can't take it, right? But what I will say here is the real truth of this trade lies in this area here, right? Because we have to think about, what do we have to go off of here? Well, the only real thing we have to go off of here is this support and resistance flip in the short term, right? Yeah, we can draw a fib here, I'm sure it lines up about the 50%. That's a good area that price likes to bounce here. But the true importance of this level lies right here. Right? So what I was trying to explain to you with my previous chart, which I'm also going to bring up here, is if we look at this level here, notice how price did not close over this level, right? So picture if we close, say, up here, we'd be closing above this support level. So now we know that this level directly should hold right here. And we can pinpoint our entry knowing where price is likely to go up here to the next first trouble area, towards the top of this previous box and these lows here. So I do not like to trade into these areas. So even though trading a break of this bar, for example, would be trading above this level, I don't like the idea of trading a break into this level here. What really gives me strength, and again, this to me is a nuance, that if you're break even and you apply, say, this type of nuance, or see if there's a theme in some of the trades that you take as losses, is that you're not trading into that level. You'd be trading away from that level here. So again, I would want to see price close here, right? It would look like this then, and then we can enter, say, right on that close, look for this level to hold the support and move higher. Likewise, it's going to help our trade management, right? We can start with our stop, say, below the bar. If you're like me, that's how I like to do it, to manage my risk, move my risk higher as this level holds, or be able to cut out under that level if it doesn't hold. This is what's going to dynamically cut my risk and dynamically increase my reward. So my true risk in a situation like that is maybe something like this from my original risk that's like this, and my reward ends up being still the same, still a solid reward if, let's say, we cut out here, which to me is very logical to do. Now, I call that dynamic risk reward. I have tutorials on that. I go over that religiously in my webinars week in and week out. So if that's a topic that interests you, I would definitely make your way over to that tutorials and start looking into what I mean by that. Again, managing your losses and your wins is crucial, but it's not trade management alone. It's that trade management integrates into the actual entries too. So your question, and I just want to read it again here so we can go back to your USD Canadian here, is you said, so the example in the USD Canadian, I had a pivot zone at 13.8, which is correct, right? Lining it with two fibs, okay, good again. I got a pin bar marked by the green arrow, but I didn't take it because the whole of the pin bar is just too low compared to where I had the confluence. So you're right, you're dead right here. And crucially, the bar closes below my area of confluence. So again, exactly what I said is exactly what you're saying, and that's correct. We want to be trading near that confluenced area. So although that pin bar took off, don't worry about it. You know, our focus should never be on those situations. There are plenty of bars that will go up and down, plenty of pin bars that will work, that won't work. We want to be focused on the ones that put us in the best situation. So that's why I went over the Disney situation first, is because I think that Disney situation is a problematic situation that can lead to you being a break-even trader, versus I think your ability to avoid this trade personally is a good sign. So I would sort of apply those principles to both in that case. And that's why I sort of wanted to show both, because I think both lack that really strong area to protect your trade here. So I think you did the right thing. Now, I posted a chart before I had seen your other one about the New Zealand yen here. And somebody had posted this on Forex Factory. Excuse me, not the New Zealand yen, the Australian yen. Somebody had posted this on Forex Factory and said, you know, this stuff doesn't work. And it goes directly hand in hand with your idea of confluence and trading around that confluence, right? So that person had traded this pin bar, right? They bought a break of this pin bar, and then price turns around. Well, if we focus on trading around the confluenced area, we don't get sucked into the bar itself, right? So if we look at the confluence area, what do we see? We see support, turn to resistance, right? Real strong support, pretty large zone here, turns into resistance, right? Clear resistance, 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 resistance. Now, what is that? What does this bar do? It comes to this area, holds the support, moves all the way higher, right? But what is going to create this pin bar to keep going higher? Well, it could, right? But we want to trade around here, right? So if we look at this trade and you buy a break of this bar, well, what are you buying a break into? Previous low, the big round number. What does price do? It turns around, right? We know there's no space to run here. Now, if we had this same bar right? And this same bar sat down here, right? So picture we had the open and close down here, like that, and then the nose sticking through this area. Well, now is that situation of the USD Canadian where we have this price pivot zone to our back, and we could probably trade, let's say there'd probably be space in here that would easily flow this trade. We could protect our order, once again use it to reduce our risk. When we take bars like this that are away from that confluence area, we're at the will of the market. So if you're not quick to break even, take some profit, this is what happens. These are the trades that lead people to losses. So I think you're actually thinking right in the right way. And by being particular like that, especially like you did on the USD Canadian, don't worry about it taking off, right? Don't worry about missing that trade. It's fine. You thought about the right thing, that we want this confluence level to be clearly shown and broken, right? And I bet it even happened on a lower time frame here. Again, I haven't checked it, but let's even look at that USD Canadian, right? So let's throw up that support and resistance area, which is right around 38, 38.05. Let's drop down in time frames here and look what happens, right? Here's price closing above it, holds as support, moves higher. So our job, in my opinion, is to really be trading around this area, not into it. So if that pin bar can close above that area here, you have sort of a home run trade into this area. And if we're good and patient to wait for those situations, and again, many times they don't come up, those are the ones that are going to be winners. And I just posted a video, which I'm going to link to again here, about a homework chart I did on the USD peso, the Mexican, the peso, about a trade where I didn't take it either. So here was another pin bar that I did not take. And I'll let you watch the homework video on that, and you're going to see the similarities overlapping that flow right from your question. So again, I hope this helps Paul or anybody else who's watching this.